I know if you go on internet and look for 2022 tax planning, a lot of the stuff out there is really not about you as a successful small business owner, what you need to do on your taxes. A lot of it is more of a blue sky creamery kind of projection, and they're talking either so detailed into mathematical calculation or just don't have the overall picture of what the business environment is. So today, and for this hour, I'm going to cover really quickly on all the math, because you know, as I do, when you prepare your taxes or you calculate your taxes, what do? You use a software. So mathematical side of things, you don't need to worry. And, you know, in reality, why would you care about standard deduction increased by $600? No, you don't need it, because when you get your 2022 tax software, when you buy that from the Best Buy, and it's already come with those numbers, so you would know it. But the reason we want to quickly still cover that is because once you get a concept of how little that is changing on the mathematics, and you will know that as a successful business owner, what you really need to care is not about the math, is really about how you're going to deal with this recession, this bear market, and this inflation. So the tax planning, it is about combating that and stay ahead of the trend. So this is why we are here today. So let's get going. So I always tell people that if you are the kind of person, do not go to HR blog, because I know that you're too good for that. And you felt like, no way, I'm not going there because they don't know my business. And then you also are not the kind of person go to HR, go to KPMG like Elon Musk does. And then what you have left is the middle market. And during the middle market session, if you're not successful, there's a government helping you. There's a government program, government assistance. But if you are really successful and also a small business, you'll find yourself in the desert because you do not qualify for a lot of these things. But at the same time, you have a real issue. You need a mega tool for your small business. But we are the kind of company knows the mega tools, and we also knows your culture. So that's how we come to really make it happen. And so we really, you know, of course, Community CPA is positioned itself in the market this way. Our knowledge is this book. All right, no responsibility disclaimer. So you take the knowledge from here with grain of salt and make sure you do your planning. And the reason you come here is because you thought you maybe will do 2022 tax planning. Don't think anymore, just put on your calendar, get it done. All right, so why do tax planning for 2020? There are some calculations on taxes had changed. I'm going to fly through some of those slides. And if you felt the information is important, just take a snap of a picture of the slides, because that will give you all the content, okay? But I will not repeat all of the information on the slides, because I just want to really shrink the calculation part and then focus on the small business owners, what you need to know for 2022. Further, bracket did not change. It is still 10, 12, 22, 24, 32, 35, 37, the highest 37. But the range of the income had changed. So just, you know, here is the change. And I know that you don't need to memorize that, because when you open up the tax software, it will just do that for you. But knowing that when you are in the bracket from 24 to 37 bracket in this one, and then you are experiencing some changes. So you may, you know, but that kind of change for your tax, you won't feel it. If everything is the same, and you will feel like everything is the same. So the federal taxes did not change. The range got changed. And then here's the state. State, of course, depends on the states, right? So whether you know, most of the states has what we call the graduated rate. They're going from, you know, 0 all the way to 8.53. There are states that doesn't charge income tax, like Nevada, Florida. Those are the states, right? Taxes. And the state also have fixed rate like Illinois. So just know your state. And when you move to the new state, I always say that if someone moving, and other than getting the household set up, and if you move to another state, the next thing you know, you need to actually pull up the website, really understand the state taxes, because every state has their own stories. So make sure you're sensitive to the state change. Retirement contribution change. I highlight those numbers because that's all you need to know. And now, and if you do retirement deferrals, let's say you make W-2 and your company is doing 3% match, don't worry about what match they give you, and you want to contribute maximum if your income is too high. The maximum you can defer, it is $20,500 if you are not old. And they call the 50 years older are old, and the younger than 50 are young. So I belong to the old generation, and I'm baby boomer generation, so I'm much older than what the Zoom trying to tell you. So don't believe in that. And so you can give me more credit, right? If I say like I'm 60 years old, you might say, wow, you must be really knowing a lot. But if I tell you that I'm 30 years old, you probably just don't listen to me anymore. So the age sometimes does play a factor. But I am not 30. I'm also not 60. I'm right in between, but I'm older than 50. So don't force me to tell you my age, but just know that if you're over 50, you can put away $27,000. The reason away is because you want to shelter that from paying income tax. And don't limit to what your employer were matching. Maybe they're matching 3%, maybe they're matching 0%, but you can still put in the $27,000 for yourself. So that will reduce your W-2. Then you don't have to pay taxes. Your money goes to retirement, right? And if you're self-employed, you have this SEP plan, self-employed pension plan, the maximum is $61,000. It is $3,000 last year. So just remember these numbers. HSA, this is a lot of people have that. FSA is also similar. These are just tax advantage saving account for medical expenses. And let me tell you what means advantage. It means that if you put that money away from your paycheck, you don't pay taxes. So that is $3,650 for HSA. All right. And increased a little. No big deal. It's a little bit of increase. In fact, I don't even care. I do not care that little increase because it's not important. And your financial planner and your tax software will just tell you what that is. Capital gain. I just want you to know the long-term capital gain is golden. And if you can have a long-term capital gain, that is what you want. And if you play stocks, and this is the bear market right now, and I don't know how much you lose, and I will tell you that majority of the client, and I knew, and on the stock market, nobody excitedly tell me that I'm making so much money this year. No one. So, well, maybe some people lose more, some people lose less, or some people break even, but there is no excitement on the stock market. And if you hold your stock more than 365 days, it is long-term. So when it is long-term, a lot of it, you don't need to pay taxes if your income is low. Even if you pay taxes, the most you pay is 20%. Remember, our income tax rate is 37 as a top rate, right? All right. Then what is the Social Security tax? When you got a Social Security, we can go to get Social Security payment, right? And, maybe you are waiting for 67, that's fine. But what you need to know is either 50% of your Social Security will be taxable, maximum is 85% of it to be taxable. I know people will say that, man, I worked my whole life and Social Security every month, and half of it I have to pay taxes. Yeah, that's normal. A lot of people pay taxes on Social Security. If you're, there's people debating whether I should get Social Security at age 62 or I should wait for age 67. And that is $1 million question. My question to you will be, when do you think you're going to die? Right? If we don't know when do we think we're going to die, then the next question will be, are you in good health? And, I don't know. And I have a really close friend. She's in good health. And by the time she discovered her illness and to the time she passed, and it's only 6 weeks. So, we don't really know our fate. So if you care about that, you should start drawing at 62. As soon as you're available, you draw. You're going to pay taxes. Yeah. If you still make money and you got Social Security payment, you pay 50% of your Social Security, or you pay 85%. I mean, it's not 85% of your $2,000 is all go to taxes, right? It is 85% of your $2,000 Social Security payment that's subject to income tax. So that would be what, about 30% of your 85%. So it is not really dark. It is a little gray, but just know that Social Security tax is real when you make money, and especially if you have a lot of investment income and your retirement life is pretty good. A lot of baby boomers are doing really good. So with that, yeah, they're gonna pay taxes on Social Security. It's okay. Say that if we make money, we pay. Why not? This is the country that's surviving on tax dollars. If none of us pay taxes, what are they gonna do? So, but there are people who doesn't pay taxes, like our President Trump, and don't pay taxes. The only taxes he paid was $700. I thought that was a really funny. I am not his accountant, so I would wish that I'm his accountant, so at least I can learn one trick or two. But I do think I have the legitimate tools right here to help you to save taxes. I don't know what tools he used, but he didn't pay taxes. And he is very wealthy, I suppose, right? All right. 6,000 for anyone under 50, 7,000 total for anyone under 50, over 50. I am just like, they're cutting off on 50, saying you're old and not old. Someday there will be a class lawsuit come out and the discrimination for people who are 51 years old, because we feel like we're 21, but we are like already classified as old. Okay. All right. So Roth IRA, that is a good one. And if you want to put money away, and this money you put away doesn't reduce your income tax, folks, right? It is only just getting your income tax paid right now, so the growth inside of the Roth IRA come out for free for you. That's what the financial planner would tell you. I am a tax planning person. I do not see things the same way as a financial planner. That's why you want to kind of balance what these two professionals are saying. And financial planner to me is a futuristic, optimistic people. And a tax planner for me, it is practical and the current interest people. Like we look at today, whether you're gonna save taxes or not, because the president can change and can be impeached as well. And we better just act on whatever we have right here, know what we do. So next president comes around, maybe changing things. So we don't, we always want to make sure that we stay on top of the change. That is all about planning. That is all about planning. All right, inflation adjustment in 2022. Just quick summary. Standard deduction increased by a little bit. Okay, and the EITC increased by a little bit. Gift amount increased from 15,000 to 16,000. And if you don't do anything about gift, and don't worry about this, and when it comes to you, it will come to you. We use that to do a lot of tax planning, and that's actually a very useful tool for someone with a business that's growing really well. Like successful small business owners, you should know about that. All right, now I'm going back to the first slide. Remember, why do tax planning for 2022? Why not? What if I don't do it 2021 and 2023? I don't think about it. Why should I do that in 2022? Here is why, and especially for the small, successful business owners. So we already talked about mathematical changes, right? And I don't worry about that. I know you know how to use computer. I know the computer knows how to calculate, and you're gonna have the software help you to calculate. It's no big deal. Now, there's also a business environment concern. And for small business owners, and you want to plan at least 12 months ahead. So we're in what? The month of July. We have 5 months going to the end of 2022. And inflation rate is highest in 4 decades, folks. 4 decades means what? 19. It is very high. Inflation is high. That means what? Interest rate will go up. And what else that means? That means recession is pending. In fact, and just on Thursday, which is 2 days ago, and the Republican House, this people tweeted, be honest, it is a recession. They already determined. The government didn't come out to say that because they don't want to. They don't want to declare failure. They think that, you know, we're not, and then you're gonna be okay. No, we're not okay, folks. Recession is here. Recession is a period of temporary economic decline during which the trade and industrial activity are reduced, generally identified by a fall on GDP in 2 consecutive quarters. So I give you the shrinkage now. The first quarter of 2022 was 1.6% shrink. And the second quarter is 0.9% shrink. So 2 consecutive months, we're here. So we are in recession. So what does that mean to small business owners? I will tell you that this 2022 recession is different from 2008. 2008 recession is impacting financial industry a big time. You know, Wall Street is turned upside down. .com is being affected because they are all in leveraging lending. The housing market, yes, that's all related to mortgage and lending. Small businesses like your little restaurants or your grocery stores, it is not impacted the same way as what Wall Street was experiencing. But this 2020 recession is different. This one is a grassroots recession, which means that it's us going through recession and impacting the higher level of economy. And because it's a grassroots recession, so it's very easy for the top guns to ignore us, to ignore you. They don't want that our grocery bill has tripled. They don't want to acknowledge that everything we do has raised price. They don't want to, when you go to a restaurant and your bill is going to be more than what you used to pay because they don't care. But we start seeing it. Our small business starts. Store used to be prospered over the COVID. Right now is laying off people left and right. Okay, now successful small business owners, these are the pointers I want to give you. Plan to save taxes in 2022. It is your opportunity to save taxes. Okay, and you need to understand the tax credit and the tax deduction difference, right? And tax credit are the credit reversing your tax bills. So $1 tax credit worth $100 tax deduction. So make sure that you take out all the tax credit. If you search our webinar, if you just go to Community CPA YouTube channel, you search our webinar, say tax credit and tax deduction, you will find the webinars. We talked about the difference and also what credits are available. Okay, and then if you are you're successful, you probably had a lot of money saved. And when you save these money, and you probably realize that your stock market was really not doing very good. You lost money. And you know, when you have capital loss, it is what? It is 3,000 maximum deduction. But what if that is not capital loss? It is a regular business loss. Suddenly you can deduct it all, right? So I just want to mention that to you so you know that there is a difference between how you treat your losses. And buying equipment with a supply chain is shaky. There are construction companies are sitting on the job orders because they have no supply. So this is where the GDP will slow down. This is where recession is coming through, folks. So when you need something, look for secondary market, because there are people who couldn't make it, they're selling it. And merger and acquisition is a big time. And when this time comes, those not so successful small business probably need to be taken in by you. So think about expanding. Think about expanding when the recession is here. That is the best time to expand. All right. Invest in things that you can feel and touch, and stay away from virtual world. And these are the things, yes, like a business advice, but they are taxed. They are. If you buy a building, and we can do cost segregation and deduct your expenses more, so you can save taxes, right? But if you buy and there is not, all right, so you want to make sure that you are buying things that can yield deduction so we can save taxes. But I don't want you to buy things you don't need, because I want you to reserve so that you can buy the good deal. You only want to buy the things that you want to buy. If you are not a real estate person, don't look at real estate, and then look at what equipment you always desired and you just couldn't buy it. Start looking for secondhand equipment. The reason I say secondhand, because the brand new one, you may not even find it. No kidding. I drive this car, and this wheel, I have a car brand new, and I blow up the tires. So to get the same tires, and this was last month, I was told I only can get the same tires in November of this year. This is how broken the supply chain is. So I'm driving a donuts wheel car right now, because the real wheel doesn't come in until November. So this is it's just a regular life example for us to know that the supply chain is struggling so much, and you may not get new. You need to look for secondhand. And when recession is here, folks, one of the biggest characteristic is what? Is audit. Everyone will get audited, because that's the only way for the government to still sustain the function and getting more out of the people who probably did the wrong thing and getting money back. And you think right now, all of these going on with the ERC claim, there's so many people don't qualify ERC, but they would get a call from some scammers, tell them that you can't get ERC. The calculation, the number is so attractive. People have a hard time to let it go. But the problem is that you're not eligible. And the company who does that for you, they make you sign to say that you yourself decided you are eligible. What's going to happen to you? You will be audited, and you have to return the money with penalty and interest. And what happened to the company who did it for you? Nothing, because they did it under the protection of the agreement. And they did the formula, they did a 941X, then that's a machine can do it, right? So really make sure you are very sensitive to the government scrutiny, because that's how they do. And especially for small businesses, we are the low-hanging fruit for the government, because we are the one, by large percentage, making more mistakes, which is true, because a lot of them don't listen to this webinar. A lot of them don't do work with Community CPA. They do that themselves, or they were doing with somebody who will disappear in 3 years and do it wrong. That's very common. And compliance review is a one way for the government to recover the losses. The more money the government give out, the more compliance review it will happen. And think about it, PPP, ERC, altered venue grants, and all of these things. It is going to come back to small business owners. So you want to make sure you know that is a must. But when I say, okay, you need to get ready, just in case they audit you, you got very good backup. What I mean by that is to get your accounting in order. That is what I'm trying to say. You need to really have a clean book, not someone on your Excel spreadsheet. You need a ledger. You need to have transaction booked by real time, real amount with vendor name. You need to sort these things any way you need, but to come up with financial statement that will be a tax preparation backup document. To not have that order, when you are being audited, it will be the same thing. You have to start all over again. There's no shortcut. Accounting is accounting. You have to do it. And we, in our firm, I'll tell you the biggest accounting go back kind of work we did, it was for 15 years because they were under some sort of criminal investigation. And it went really far. And then all the record and the books supposedly not there anymore, but we have to dig into the bank, figure out the third information to come up with a financial statement for that investigation. So there's no saving for that. If you don't do accounting, you've got to hire someone to do accounting. Of course, Community CPA does accounting, and we do our accounting in the very tight ways. And we do make sure that your accounting is done right if you are here. Okay. And our, other than the accounting, you need to do it properly. The other thing you want to make sure is to pay your taxes on time. And because if you don't, you can always pay it late and get it set up. But that's always a trigger for a red flag of auditing your account. And so you want to pay all your tax payment on time. And you want to always know what government has on your account. We call that data match, right? If you work with us, you already know how we do data match. And we offer data match service 20 years ago. And this is not about the work we're just doing it now. It is this history of our firm. We do data match for people who doesn't really have a good record. The data match would allow them to stay away from government scrutiny because the data we matching is government data matches your data. So if the government says you have this much money you made and you didn't tell me you made that money, I will be going after you. I will say, hey, John, what's going on? Why are you not giving me this income? I already see that at IRS. Then John may go, oh my goodness, I forgot about it. Of course we do. It is very easy to forget when we are under so much stress, or you are a successful small business owner, you are told a million directions and you're successful. You're just successful, you're busy. And people who are successful, they are all busy. And I don't give a crap of someone telling me that, oh, you can make a lot of money and not working. Oh yeah, there's some lucky dude, out there. They can do that, but not me. Not me and not a lot of people. So I would consider myself normal, and you are a normal person I talk to. You need to work hard to be successful, just like I am, right? So we don't give that kind of crap, and we just can work hard and making sure the things we don't have time to do and farm it out. So someone else doing it for you. So I put out some items here. These are highly audited items. And it's not like, you get audited for 1040. No, sometimes the audit just zoom into these items. Your income is audited, your tax payment is audited, your loan, depreciation, cost of goods sold, and the capital draws, all of the item and hot item for IRS to audit. Okay, so you also want to make sure that when you are doing accounting, and not only your income statement need to be done properly, your balance sheet is even more important. All right, see, I have two questions here for you. If I do your tax planning and a cash basis, accrual basis, or calendar year, fiscal year will come into play. But if I say, well, what is your basis? Are you mark to market, cash basis, or accrual basis? You go, I don't know what you're talking about. Ying, are you speaking English? If that's what you're saying, man, you're lucky to be successful. But listen, for 2022, you need to plan with these tools. These are my tools in my toolbox, and I can share that with you. And of course, for business taxes, I want to make sure that you know the structure. What is tax structure? Tax structure is how you want your business to be. And imagine a business is a house. Do you want your business to be a condominium, detached, single house, or farm land with a house? How do you want your business to be? And that determines how much freedom you have and what you can have in your house. So structure of your entity is really cool. And if you have issues paying too much taxes, maybe your structure is wrong. So if you go to the YouTube channel under Community CPA, just type into tax structures and you will learn a whole lot about that. All right, now let's make sure, and you also know about filing deadline, right? That's basic. And for your finance corporation in 2023 is March 15. And for your 1040 and 1120, that's a C Corp, right? And that is April 17. So we're talking about 2022 planning. So this is 2023. There are a lot of planning items can be done before December 31st, 2022, but cannot be done when you pass that date. So that's why we do planning in November, October, and we want to get planning done so you have time to implement it before December 31st. But if you wait until December 31st after, you can still do planning, but it's very passive planning. It is not proactive. So I want you to be able to do proactive planning. And other considerations related to business retirement plan. Business retirement plan has a lot to do with a large amount of moving around. So it's really a big tool. And I always work this with financial planners that, who are also our clients and successful. And we work with these financial planners. And of course, your personal retirement, that would change when you have your business side of retirement and a contribution and a charitable trust. Those are another tool you have when you are a successful small business. And of course, tax efficient investing. Some of those municipal bonds and stuff, and they don't have taxes. Or sometimes when you have a life insurance you're buying and for yourself because you are the key employee in the company, and those can be deducted, depends on how you structure it. So there is knowledge there, right? Oh, of course, your long-term capital gain. So when you work on merger and acquisition and selling your business, I am telling you that if you are thinking of selling your business, man, you want to talk to CPAs. You want to talk to me because they are selling. There are selling I can do for you. You would not pay any taxes on the capital gain. But if you do it in another way, you pay every penny on the tax. You really, because you're not selling business every day. So I understand that you may not know that, but you just need to understand when you are successful, you need a professional. You cannot yourself saying that I know everything. I felt that way myself too. I know everything when I was younger. The older I got, the more I know I don't know everything. So I understand the successful small business owners, what's your mentality, how you are thinking. No, trust me, if I come through the same way as you do, I knew what you are thinking, overcome that. You need professional. Now, let me bring you the last page of my presentation, okay? Do the tax planning help you, right? So I want to tell you how we do tax planning. And we get your third quarter information ready. So if I do tax planning for you on 2022, I will get your financial statement for the third quarter, for the whole first, second, third quarter. Then I use that to project your December income and the December expenses. Then I lay out the tax for you. So you kind of, your life, your finance life on one page. And I will show you what it looked like. This is something, it is not some kind of software just spit up a thing for us. We don't even know what the software is doing. No, this is drawn by us. We actually do that for all of our planning clients because we know are so picturestic. We take picture better than words. So we actually have a map laid out for you. We discuss ways to early in November. We talk about how to save taxes. We will implement that already by December 31st. And we hold your hand to implement them. We data match your return before filing. And with us, you can sleep well. I am not kidding you. And the clients who does planning with us, who with us, never notice from the government, never mind about audit. They don't even need to know how to spell the word about it. If English is not there, it's not their first language. So let me show you our map, right? And one last one, and contact Catherine at communitycpa.com if you want a tax planning session with me or with my senior team. And we are very cool. We know what to do for you. All right, let's look at my tax map. I'm going to show you the tax map. Let me see where I am on this one. I need to ending the slide so you can see. See, this is a tax map that I did not too long ago. And so every box represents a tax return from a taxpayer. And we lay them out so the taxpayer don't have to flip pages to see what they have. We don't give you mechanical printout and a big, huge stack of paper to impress you. I know you don't even read. You don't have the time. All you have is one piece of paper with everything. That's what we give you. So here you go. We have all the companies on the side. In the middle, that's the 1040. So we actually estimated everything into, because this corporation. So all of those is passed through to the 1040, right? So that's why you see those arrow and right here and it going into 1040. And it gives us the refund, the due. So what we do is we estimated that, then we have the taxpayer pay the state right there, right now. So by the time we come to 2023, we can sleep because we already did everything. And then we prepare the taxes and file extension because the data we draw from the government is not going to be ready if we don't file extension. So right now in July and August, it is the months for our firm to actually getting data from the IRS and from the states and wherever we can get the data and to match to the taxpayer. We actually just had one taxpayer data came in, and we noticed that this taxpayer has a different state unemployment insurance, different state. So we contact the taxpayer and the taxpayer don't even know anything about it. See? And if you don't do data match, this taxpayer's 1040 will be wrong because she did not report a different state unemployment insurance payment and she doesn't even know. And then the government don't know, you don't know. So the government will just say that, well, you didn't pay this tax. Then their notice comes. If her taxes is complicated, which it is, it'll be audited. When the personal return is being audited, then there we go, and everything else is getting audited. If you get audited by the middle box, and your other business will be audited. Or if you get one business get audited, it very well can go to your personal. Okay, so this is the map that we give you when we do the planning to just have you have one page of all your need to know. And we will plan this out and have you getting refunds or have you pay down the payment now rather than 2023, so you don't have any late payment penalty. Makes sense? So we have clients with 10-year worth of those kind of maps. So that's all they keep, because the rest of it you can save online. The rest of it you can do whatever you want or don't care. But this map is a summary of your tax life. That's what we offer to our client. So I hope this section really offers you some solid information. You know, I actually go on YouTube channels and I look at other people's YouTube, and because I want to learn, when I look at other people's YouTube, if I turn it off halfway, I knew why I do that, because the information is getting too dry or it is not relevant. And our videos, and according to YouTube, has a very high reading of people going through the whole time. That's only because what we are talking about here is really makes sense to the small business owners, especially the one who are successful, because you need us. And of course, we want to help you. And I will see you again on my Tuesday and Saturday webinar. Talk to you guys.